Win rate versus risk to reward, the one that actually make you profitable. Most traders think a high win rate means success, but here is a shocking truth. You can win 30% of your trade and still be widely profitable, and you can win 90% of your trade and still blow your account. Today, I will show you once and for all what matters most: win rate or risk reward. And the answer will change your trading forever. Welcome back to my channel, traders. In this video, we are going to break down the real engine behind consistent profitability. No strategy, no indicator, but the relationship between your win rate and your risk reward ratio. I am Mr. Joshua, that teach traders how to trade the smart way. Most traders chase a high win rate, 80% win rate, 90% win rate, even 95% rate, which is actually risky. But what they don't understand is that a high win rate means nothing if your losses are bigger than your wins. Now, you can win 9 trades, and then let's say in each trade you make $10, which is $90, and then you lose one trade, which is $100. It means that you have lost everything that you just got. You have a 90% win rate and you are still losing money. So your win rate is not the solution. Why risk to reward is the profit engine? Because risk to reward is a real profit driver. Now, it tells you how much you win compared to how much you risk. Are we together? Risk to reward is the real profit driver. It tells you how much you win compared to how much you risk. Now, if we are talking about risk to reward, for example, you have 1 to 2 risk to reward ratio. You risk $10 to make $20, or you risk $10 to make $30. That is the magic. So listen, with a 1 to 3 risk reward, you only need 20% win rate to break the even. You don't need to struggle. But here is where every trader gets confused. Now, win rate versus risk reward, which one matters a lot? Now, they both matters, but they don't matter equally. All of them matters, but they don't matter equally. And this is it. Your risk to reward determines your long-term profitability. Put it at the back of your mind. It determines your long-term profitability. That's your risk to reward. While your win rate determines your short-term stability. Now, the real formula is very simple. The real formula for, especially for profitability, is very simple. Now, you have expectancy, your win rate multiplied by the average win, minus your loss rate multiplied by the average loss. Now, this is why a strategy with 30% win rate plus 1:4 reward beat a strategy with 80% win rate plus 1:1 reward over a long time. Now, we are not in a haste to make profit, but we are in a haste to stay in the market. We want to stay in the market so that even when people are blowing account, our account is still intact. Now, the sweet spot is that for most traders, the safest and the most stable zone is to win 40 to 60%, and then their reward ratio 1 to 2% or 1 to 3 minimum. Now, this gives you the perfect balance between consistency, profitability, risk control, and emotional stability. Now, you have to understand this. Let me explain risk to reward ratio. Now, look at my screen. Now, risk to reward ratio, you can decide to take profit at this particular place. Take profit. Now, where you see these arrows are areas that you can decide to take profit. And now, if you decide to take profit at those particular place and you started your trading at this particular place here. Now, let me cancel this then. Now, what I'm showing you now, what I'm showing you is 1 to 4 reward ratio. So just imagine you take your profit here. That's 1 reward ratio, 2 reward ratio, 3 reward ratio, 4 reward ratio, and if you move up here, is 5 reward ratio. Now, most traders usually take 1 to 3 reward ratio. In fact, some is 1 to 2 reward ratio. But you can continue moving your stop loss, your trailing stop loss, until you reach 4 to 5 reward ratio. But you see, that is the major thing. But if you're talking about win rate, you just win. What if you win and you end here, and then you enter sell instead of waiting for it to continue the buy, and then you lose everything that you have gotten here? That is what I'm talking about. That is just what I'm talking about. Because there must be reward ratio, and you must understand how this reward ratio works. Now, when you have fewer wins but more profit, that is the best. Fewer wins, which means that you trade little, you don't trade much trading, but you have what? More profit. Now, account grows even during loss strike. Even when you are losing, your account what grows. Now, you need to balance the strategy. Your win rate should be 50%, and your risk to reward ratio should be at least 1 to 2, 1 to 3%. Now, this is a very stable growth. When you win 50% of your trade, and then your risk reward is 1 to ratio 3, it's very balanced. Now, easy to manage psychologically. Very easy. You will not confuse yourself. Your win rate does not determine if you are profitable. Your risk to reward ratio does. So you should stick to risk to reward ratio. Now, aim for at least 1 to 2 reward ratio or 1 to 3 reward ratio, and stop obsessing over being right all the time in trading. Now, trading is not about winning every trade. It's about winning the right trade. If this particular video open your eyes, smash the like button so YouTube can share this video to traders. Comment expectancy in the comment section so that I will know that you are actually following this video, and your comment is actually a motivation to me to keep doing what I'm doing. Thank you so much for watching this video. Don't move out of YouTube without watching my next video. My next video is about compounding strategy, growing small account fast. That is what it's all about. Compounding strategy, how you can grow a small forex account very, very fast. So see you in my next video. I remember Mr. Joshua, that teach traders how to trade the smart way. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.